All right, joining me once again here on the Matthew Filipowicz Show is Rebecca Burns. Rebecca is a reporter and assistant editor for In These Times magazine, which you can find at inthesetimes.com. You can also follow her on Twitter at REJBurns. Rebecca, thank you so much for being on the show again.
Thanks for having me, Matt.
All right, so Rebecca, you have a really, really great new investigative piece up at In These Times about a Wall Street firm called Blackstone, and what they're actually doing in the city of Chicago, Illinois. Tell us all about it.
Sure. Well, Blackstone is the largest private equity firm in the world, and it's been involved in a host of sort of murky things. It's an old foe of labor for buying out troubled companies and shipping jobs overseas. What our new report looks into is sort of what's happening in the wake of the foreclosure crisis. It's, the foreclosure crisis has started to kind of fade from the public eye. But we examine something really sinister that's happening in its aftermath, which is that investment firms like Blackstone, which are sort of flush with cash, especially from banks and other institutional investors, are now gobbling up foreclosed homes, sort of at bargain basement prices, and then converting them into rentals. So in some cases, they're renting foreclosed homes back to the very same people that lost them, sometimes in legally dubious foreclosures. And just in general, Blackstone is now the largest owner in the nation of single-family homes. So we have a situation where Wall Street landlords that caused, the housing market crash in the first place are now in this really prime position to benefit all over again from the housing market.
Yeah, it's so again, just when you start this story, it's so malicious, and it's very much this whole disaster capitalism type of thing where, they destroy the market and they drive things into the ground, and then it kick people out of their homes, and then they're going and they just start grabbing them up at a discount price. It's really nefarious.
Yeah, absolutely. And where we sort of start the piece is with this gleeful proclamation in a Morgan Stanley report in 2011. Where financial analysts say that, the U.S. housing market is moving away from an ownership society to what they call a rentership society. And they're sort of proclaiming all of the opportunities that this brings for investors. And certainly in the piece, we, sort of outline or allude to a few ways that the sort of ideal of homeownership hasn't necessarily worked well, particularly for people of color, for working class whites who have always been excluded from it. But certainly a rental market controlled by Wall Street isn't likely to turn out well for us either.
Yeah, one thing that you note in the report, and something that we all, I think just the general concept of having these firms buying up a bunch of houses is something we should definitely be worried about, and something that is very, very troublesome just on its face. But one thing that you report on is, I guess in October 2013, Blackstone actually partnered with Deutsche Bank to actually offer the first rental-backed security to Wall Street investors. Tell us about that, because that, the mortgage-backed securities are what caused the crisis to begin with, the crash. And if they're actually trying to start betting on rental-backed securities, that's really, really frightening.
Yeah, absolutely. I mean, it's sort of an instance of, first time is strategy, second time is farce, that it's hard to believe that this isn't getting more attention. Rental-backed securities really are essentially, analogous to the mortgage-backed securities, the toxic mortgage-backed securities that crashed the economy, in 2007, except for that they're backed by streams of rental payments rather than mortgage payments in these homes that are being rented out by the Blackstone Group. Now, at this point, there's the first pool of securities that was sold was fairly small, but the other major Wall Street firms that have pursued this strategy, so there's a group called American Homes for Rent, also Colony Capital, are also looking into securitizing rental payments. So we have kind of the rise of this new product, very dubious, just both in its general conception as well as in its execution. We also report in the story about it's unclear how many of these homes are actually occupied. So we don't know how consistent these streams of rental payments will be. So there's a real worry among, housing advocates, among consumer advocates, among, sort of more progressive financial analysts about just creating the same conditions that caused the market crash a few years ago, just creating those all over again.
I'm talking to Rebecca Burns, reporter for In These Times magazine, inthesetimes.com, and on Twitter at REJ Burns. So let's go back to Blackstone specifically. And the truth is, while they're buying up all this property and they own all of these homes that they've turned into rental properties, they've actually been really bad landlords. At least that's what a lot of the evidence is showing. Tell us about them and actually how they actually are when it comes to taking care of the renters and the properties that they own.
Sure. Well, you may not be surprised that Wall Street landlords, from what the tenants that we've spoken to, aren't the best landlords. If you can imagine the kind of customer service that, everyone hates when they have to call the internet company or something with call centers, somewhere that you're talking to some poor underpaid person, either overseas or in a state with low wages. Imagine doing that every time you have to put in a maintenance request. So there's just that basic level of problem that, in another piece of reporting that was done last fall, where Ben Hallman from the Huffington Post talked to some former employees of Blackstone or of Invitation Homes, their subsidiary, and they were saying, look, we have so many maintenance requests coming in from so many different places that we just can't possibly keep up with them. So one element of it is just the extremely rapid pace at which they're buying up homes, as well as the large geographical distribution, just creates some logistical problems that, sort of mom and pop landlords that many people up to now have been used to dealing with don't have. The other aspect that we found, though, is that at least in Chicago, there seems to also be sort of a concerted effort in the lease that this group Invitation Homes, which is, again, the subsidiary that Blackstone has created, the lease that it's giving to tenants appears to sort of purposefully try to evade a lot of the maintenance responsibilities and other types of responsibilities that landlords typically have. So we talked to one tenant named Antonio Hernandez, who said that, the first thing he said when we approached him, and he said, are you an Invitation Homes renter? And he started telling us about his experiences. And he said when he moved in, he was told that he had to rent the house as is. And he says, I didn't understand what that means. If the roof blows off, are they going to keep it as is? And we got a copy of the lease being given out and showed it to a few lawyers. And they basically said that it violates a lot of the baseline protections that exist, again, at least in Chicago, under something called the Residential Landlord Tenant Ordinance, that basically try to avoid landlords or try to prevent landlords from doing what Invitation Homes is doing, which is making money by shifting all of the responsibilities onto tenants. And this is creating a situation, that first of all is just unethical and potentially illegal. But, it's also dangerous. One of the tenants we spoke to said that, multiple maintenance requests had been ignored to fix a railing in the basement. And as a result, his elderly mother-in-law, who's staying with them, fell down the stairs and hit her head. So there's all these kind of also tenants' rights concerns that are arising out of this kind of scheme.